Financial Survival Network, helping you survive and thrive in the new economy. Go to CarrieLutz.com and sign up for 30 free micro trainings on financial survival.
$14.90 WGCH. This is Carrie Lutz. You're listening to the Financial Survival Network. If you were freaked out yesterday by the precipitous drop in gold and silver, my next guest is going to explain to you the answer is quite simple. It's an alien plot to confiscate all silver. Actually not, but David Morgan, he gets it. David, how are you?
Doing well, thank you, Kerry.
So when did the little green men land and grab all our silver?
Well, it was green, meaning they were in the positive zone for a little while, and then it started going red, meaning large sell orders took place. And this just came from the GATA website, which is off of an article that can be Googled from Gold Alert staff. Came across the wires. And it looks like a large seller of gold in the market sold 10,000 contracts and it downticked the price $40, which represents about 1 million ounces of gold sold. Roughly 200,000 contracts trade per day, but it's unusual to say a large single trade of that size. And I say it is unusual because obviously these things don't happen daily. But if you've been into metals for the several decades that I have, particularly in the last decade where we had this great bull market that is still intact, when you see these huge sell-offs, there's no reason to sell that much at a time unless you definitely want the price down. I've said this before, but it bears repeating. The only reason a market moves up or down is buying pressure or selling pressure. So if you are wanting the price to go up and you're long and you're a fund or you're going to buy a great quantity of a commodity or gold, as let's use gold, you're going to buy over time in relatively small amounts, because if you put a huge, large order in to buy, millions upon millions of ounces at one time, you'll shoot the price up. Everyone that's a professional knows what moves a market. So you buy very quietly over time. And the same thing if you're long and you sell. You cannot sell your whole position at one time. I'm talking large orders here without moving the market. Well, everyone, again, that's a professional, and most people on the internet that pay attention to things know this as well. So the only reason you're going to sell 10,000 contracts with one trade is for one reason and one reason only, to push the price down. Now, it happens in gold as it happened yesterday, and it also has happened in silver. It's probably happened in silver more often than in gold. And it's the same story in the silver market. Large orders for selling on paper that drives the price down, and it panics people or panics some people. It's basically a paper scheme to move the price in a certain direction at a certain time.
And what's interesting about this raid, as we call them in the trade, right, is that gold and silver are at the beginning of a breakout, and normally what these guys do is they wait till the end of a rally where the price, it's getting a little bit overbought, and then they just put their thumb on the scale and drive the price down. Here, they're actually jumping into a rally, and to me, it's the equivalent of standing in front of a freight train and thinking you're Superman and that you're going to stop it, because is this one-day action enough to break this rally realistically?
No, I don't think so, but it did a fair amount of technical damage. I mean, as a technician, these are rules of thumb. They're not perfect, but if you were going to say this didn't do any damage, then I would want to see a 50% retracement today. And the market's still open as we're doing the interview, Kerry, as you well know.
Sure.
But silver's up, 40 cents after, being off about $2.50 yesterday, and gold's up like $24 after being off about 80 yesterday. So, if gold was up 40, 45 today, and silver was up like $1.20 today and the next day, what that would say in most cases, and these things are pretty reliable, that you guys, didn't do anything to us. Give us another blow. But that isn't the case. The case is they're up. Technical bounce like this is totally normal because the shorts are covering more positions at these low levels, so it's to their advantage to get out on a small bounce. And I think there's been enough damage done. It's probably going to take a few weeks to come through and, build back up. But so be it. I'm not all that concerned by it, but I don't want people to get the wrong idea that, they didn't, get into people's heads and all of that stuff. But the facts remain so strong that gold and silver are really the place to be. And they have to do more and more sales on paper to get the same effect, which I think is a very clear indication that they are losing, not winning. And what I mean by that is when it used to take X amount of contracts to move the price of silver down $2, and now it takes 2X to move it down $2. That shows you they're running out of ammunition. And we can talk more about, that as, maybe on the next show when things have settled out and say, do you still have the same opinion that, it's going to take, several weeks for this or a few weeks to build back up, David. And, who knows? I mean, maybe something will come in the market and we'll be limit up in gold and silver 3 days in a row. I doubt it, but that's it.
Yeah, well, I'm looking at it. If you go round number, technical analysis, 1700 being a pretty major resistance point because it was hovering around there. And when it's gone below 1700 recently, it pops back up pretty quickly. We're over 1700 today. And for silver, 35, it looked like 34 was that real heavy resistance point. So they got it down into the mid 34s yesterday. Now it's back over $35. So to me, that shows, I agree with you. It damaged the chart because if they had allowed it to go, February would have marked breakouts on the last day, highest price, breakout, and it would have been off to the races for March. We would just have that solid footing. So, yeah, in the long run, it's not going to do anything. We know that. And the amount of short-term damage they can do is being diminished as well. But on the other hand, they've given people an opportunity to buy that at prices they wouldn't be able to, although I'm sure premiums jumped yesterday too, right?
Somewhat. I didn't have a chance to check with a lot of people, but from experience, what you said is accurate. Usually when you get that kind of a situation, the real market, the physical market, these dealers protect themselves with volatility because of the volatility. And because the volatility is so high, the spread moves up. So let me just say it in more clear terms. Yeah, they're not. You're going to pay a higher percentage over the spot price to get your product because they protect themselves. They do it on both sides, by the way. At the top of the market in January 1980, I was in the Los Angeles area at the time, and all the LA dealers were paying $35 for silver, even though the COMEX price was $50. They had bid back, $15. But if you look at a chart, I mean, silver wasn't at 50 for like weeks. It was there for hours. So, they do what they have to do. They're in the honest to God silver business, I call it, the real physical market.
Yeah, well, yeah, they've got to protect themselves, obviously. And I told the story a few weeks ago where I went into my local coin dealer and, I sold a watch. He sold for me and I had the money. And I said, all right, sell me some gold. And at that point, gold was like in the low 1600s. And he said, well, to tell you the truth, if I sold it to you today, I'd have to lose money on it. So come back to me when the price is higher. And I said, well, the whole reason I want to buy it now is because the price is lower. So that got me nowhere. And I just said the heck with it. And I'd be up $100 an ounce now. But what can you do? That's just the way these things work. So your advice basically is stay the course, ignore the hype, ignore the headlines, and just continue the mission, right?
Pretty much. I'll just add on to that. I mean, certainly be educated and understand how these things can take place, understand, why, but don't let it rock your world because there's no need. The fundamentals have never been stronger. So just stay with the conviction and realize this is part of the what I call game that's going on. It's interesting, of course, that, Fed head Bernanke was giving a speech while this whole thing was taking place because maybe they're punishing me. I'm being funny here, folks. Please don't take this serious. This is my sad sense of humor. But I think the last interview with you or maybe someone else, when Bernanke spoke, gold was up about $50, and I made probably made an error. I won't say an error. I made the comment that, geez, this is great. I wish he'd talk longer because every time he opens his mouth, it's good for a $50 pop in gold. Well, I think I have to eat those words, Kerry, because certainly when he opened his mouth yesterday, it did not move the price of gold up, quite the opposite.
Yeah, that little interchange that he had with Ron Paul, where Ron Paul held up the silver coin and he just didn't want to really answer any of these questions. He really ignored everything that Ron Paul said. Other than to mention that, hey, if you really want to own gold and silver, you're free to do so now for the time being, right?
Right.
Really entertaining. And you can learn a lot more from politicians by what they don't say than what they do. That's usually the case. So, hey, if people want to reach you, themorganreport.com and silver-investor.com, right?
That's correct.
And you're still advocating that silver savings program, right? Which one is that?
Silver123.net, silver123.net.
David, thanks for taking time out.